Do you think we're headed towards recession?
We're certainly heading. It's certainly a very, very high risk factor, and there's a path. It's a narrow path, but I think the Fed has very powerful tools. It's hard to finely tune them, and it's hard to see the effects of them quickly enough to alter it. But I think they are. I think they're responding well. I think it's definitely a risk. If I were running a big company, I would be very prepared for it. If I was a consumer, I'd be prepared for it. But it's not baked in the cake.
For more analysis, let's bring our Cross Assets Asia editor, Andreea Papuc, and the Chief North Asia correspondent, Stephen Engel. Andreea, I'll start off with you. What's the outlook looking like given the recent routes across both stocks and bonds? Do we see a sustained prospect for recovery?
Hi, Heidi. Look, I think what we can say is that we definitely are expecting more volatility ahead. The market is not convinced, despite the sharp sell-offs that we've seen, it's not convinced that we've quite reached that bottom. And for that reason, we're seeing investors starting to look at bonds again after those prices fell and yields went sharply higher. So we're seeing investors inflows into bonds, because they're starting to be perceived as perhaps a hedge against this slowdown, against a recession. It's not that investors are expecting that yields have peaked, but it is that bonds have got a role to play now as a hedge, as the Fed is embarking on this very aggressive tightening and is engineering a slowdown and a potential recession.